Hey, good afternoon. This is Chris Robinson Ag Marketing with today's post-close grain and livestock comments. Well, what a week, huh? Here it is Friday, the 21st, 2025. November can't come to an end soon enough. I'm going to talk about the weekly changes here real quick, more so than the daily. If you look at March corn, we had a 16 and a half cent trading range this week. For the week, we finished down 6.5 cents. D's corn, a 14 and a half cent trading range, down 4.75 cents. For the month so far, December corn's down only 6 cents. Jam beans. This week we had a 56 and a quarter cent trading range. 56 and a quarter, that's exactly right. We started out Monday on our lows after the nasty USD report, screamed higher to new 18-month highs. And then before you know it, we were making new lows overnight last night at 13 and a quarter at the bottom there. And the nice thing is we did finish a half cent higher on the week. So you can believe that. 56 and a quarter cent trading range. And all you did was move a half cent higher for the week. Um, so that's probably it. I would imagine there's going to be more of this to come every day. I'd expect daily 15 to 20 cent trading ranges in soybeans as this thing works itself out. If you look at Chicago wheat, for the week, down a quarter cent for the entire week after a 27, almost a 28 cent trading range. To finish the whole week, down a quarter cent. That's probably the highlights. Let's talk about cattle real quick. I did make a couple posts about it earlier, but yeah, if you do the math, basically for the fat cattle, it took us how many weeks? 35 weeks to gain. Let me do the math here real quick. Anyhow, I have the post up there if you want to take a look at it. But the bottom, the moral of the story is, we had it took weeks to rally. Well, if you look at March feeders, it took 35 weeks to rally $110, and then in 5 weeks we dropped almost 80, 79 and change. It's a 72% haircut. If you look at the fat cattle in the last 5 weeks, excuse me, in it took 25 weeks, 35 weeks to rally $76. And in 5 weeks, we gave back a little over half. Um, $42. We dropped from 250 to 208, 55% haircut. Now, the good news is we bounced. The good news is it feels like a lot of the bad news is behind us. We did get the news today that Tyson is shutting down a big processing plant. That's probably, I'm a big believer in reverse indicators. People that run those types of companies, they're not psychic. They don't, haven't figured out anything else than anybody else has. It's just a math problem to them where they didn't have enough animals to keep everybody employed. So that to me feels like we're probably near some sort of a turning point. The fact that it made it in the newspapers, everybody's talking about it. Cattle on feed, I have to say, was probably neutral. Nothing really shocking on there, unless I missed something. I was glancing at it earlier. Um, Gosh, what else is there to say? I mean, just nice recovery after a volatile week in the stock market. Stock market was all over the place, but it's getting to the point now where people are getting, they're trying to call the tops. It's the tops coming, the tops coming. They looked at what's happened in Bitcoin and everything else. Just because one market is going bananas doesn't mean they're all going to go bananas. That being said, we're overdue for a correction in the stock market. I was always taught, and I've been in the markets for 35 years now, that 5% or less is just noise. Well, when you've got the S&P at 7,000 nearly, 5% of 7,000, we're going to have big moves. When you've got the Dow Jones at almost 50,000, 10%, excuse me, 5% is 2,500 points. So get used to having 2,500 point swings all the time. And again, it's percentage moves. I know the media likes to get excited because big numbers are scary, but it really comes down to percentage moves. Now, that being said, if you've got futures on and you're moving 2,500 points in a one lot in the Dow, that's a heck of a lot of money. If you've got futures on and we're moving 200 points at a crack in the S&P, that's a lot of money. So I'm not discounting that at all. It's just the fact that percentage moves here in 2025 are a lot different than they were back in 1985 or even 2007 or 2010. The value of the index is so extreme now that these moves have tremendous amounts money involved with them. Looking over at gold, guys have been all over gold, right? We're still holding north of $4,000. That's probably going to be the fighting point here as we move forward. It's been a while since we've gone back up to the all-time highs there, just under 4,400. That was back right before Halloween, October 21st that week, and then we're lower since then. And all in all, that's probably going to be something that people are going to continue to talk about. I will say this as we head into the holidays, right? Next week's Thanksgiving, people will be less and less involved in all the markets. And if you get into December, December is generally very, very volatile because you have less people playing. Think about it. If you've had a good year so far, are you going to be sitting in front of the screen? I don't care if you're managing $100,000 or $100 billion. You're not going to be in front of the screen if you've had a good year because only bad things can happen. When I spent the years on the floor, I'd say if I could get every one of my Decembers back, boy, it would be a lot of money. December is a hard, hard trade. Always has been, always will be. And so be careful out there. Bullish or bearish, you get these whipsaw moves, a lot of movement. And I'm just going to finish up with wishing everybody to have a happy and safe weekend. We do have Dece options, one off the board today. If you've got Dece options, I would get away from, well, you already got away from them. You probably got positions on now based on them. But you need to be looking ahead to March and possibly May, certainly March. If you look at where March corn is, it's in pretty good shape. It's not on the highs. No, the highs we were there last week, 457. We're at 437 and a half, 20 off the high, but we are also a good distance off that contract low at 410. So I try to be glass half full. We're still north of the halfway back point for March corn. We seem to be trending higher since the August low. Our last major low was in October 14th at 425 and a half. Then again, just last week we made that new 5-month high at 457 and a half, which is a great gift. The trend is your friend. Keep your risk on paper. And if you're looking for help, give me a call, 312-638-8868. Have a good rest of the weekend. If you're not getting my letter and you want to take a look at it, sign up, robinsonagmarketing.com. Take a look at it. If you want to talk to me directly, call me, 312-638-8868. I'll spend 5, 10, 15 minutes on the phone with you. We can talk about what you're worried about with marketing and possibly how my program might be able to help you. If you're happy with your marketing, that's great. If you like my information, that's probably the best thing. A lot of people look at my information. I do the daily homework every day. I'm a bit OCD about it. It's stuff I've been doing for 20, 30 years, and I just started sharing it with everybody. So if you're interested, take a look. Otherwise, have a great weekend. Take care. This is Chris.